Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those of you out there who have subscribed to the channel. I really do appreciate it. The channel continues to grow because of people like you. So if you are new to the channel, or you have been watching the channel and have not done so already, go ahead and hit that subscribe button down below. Hit the notification bell so you're notified anytime we put out any new content. On this channel, we focus on dividend growth investing, and we do portfolio updates like this every Sunday morning. We did add $1,893 in new capital to the portfolio. In these updates, we are going to look at any new capital, what we bought with it. If we sell any stocks, we'll cover that. If I do any options for the week, I'll cover that, as well as any dividends paid out for the week. I'll cover that in the update. Full disclosure on this channel, out in the open, there is no paid Patreon account. There is no course for you to buy, bro. I'm not trying to sell you anything. I am just going to show you every week out in the open what I am investing in. So hopefully it can be a motivation to those of you who may not have started a portfolio already on your own. I'm just a normal guy, work, a job every day through the week, sometimes on the weekend. Actually had to work this Saturday morning myself, and last week as well, right after Thanksgiving. Usually we have Thanksgiving off, but had Friday off. I had to work on Friday. So I'm just like you, just an average person, did not grow up with a lot of money. As a matter of fact, grew up in a double wide trailer. Both of my parents, neither one of them graduated high school even, don't have a background in finance, didn't go to college for it. So I am learning along the way, and hopefully anything that I share can help you as a dividend growth investor out there. That is what this channel is all about, sharing my journey to financial freedom. So again, hit that subscribe button down below and join us on this journey to financial freedom. Join the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences. You can check out my portfolio. Drop your comments down below. I always like to hear from you. Let me know what you added to your portfolio this week, how things are going. A lot of green in the market lately. My portfolio has really rebounded. Hopefully yours has as well. And we're getting a little long-winded, so let's jump in and see what we added with this $1,893 in new capital. Now, we did have some options hit this week. So we've been running this wheel on Bank of America. We did do 2 contracts. I know we had 3 there for a while, but we reallocated the funds from 100 shares of Bank of America back into the portfolio over several positions. I covered that last week. So if you have not watched that video, go ahead and tune into and check out last week's portfolio update. You'll see I was running a wheel on 3 contracts. Now it is down to 2 contracts, and the funds from the 100 shares that we let go, we reinvested back into the portfolio just over multiple positions, not just back into Bank of America. Eventually, I'll stop running this wheel whenever we get assigned the 200 shares, but I'm in no hurry to do that right now. We did receive $68.93 in options premium. We ran 2 cash secured puts on Bank of America with a strike price of $29.50 and a deadline date of December 1st. So basically from Monday through Friday. It expired. Those 2 contracts expired, worthless. So we keep the funds. We keep that $68.93 in premium, and we're going to run this wheel over and over again, collecting this premium. And if I was to be reinvesting this back into Bank of America, basically that would be 2 shares that the options premium would have paid for. I am not right now. I am using the sell of these 300 shares of Bank of America as a way to decrease my taxes for the year by doing what they call tax loss harvesting. So I can't technically buy back these shares for 30 days for that to work. So I'm going to be pretty conservative on this and hopefully not get reassigned before, I believe it's the 20th of this month, and then I can freely buy back Bank of America shares and not have to worry about it impacting my ability to write off the loss on this one. I also had 5 contracts on Sibanye-Stillwater, ticker SBSW. This is out of the mining sector. There's out of the material sector, a mining company here. Bank of America is out of the financial sector. And we ran this for a date of December 15th, a strike price of $5. This is a covered call, so I own 500 shares of Sibanye-Stillwater. I received $22.38 for running this. This is another one where if it's above $5, these will be called away, and someone will own these 500 shares, and I'm going to use that as a way to also decrease the taxes that I owe on my portfolio and do tax loss harvesting on this position as well. Since I am down, I'm going to try to do that with both of these positions here. And I should probably do a video on tax loss harvesting. I'll try to do something by the end of the year, or maybe by the first part, well, by the end of the year, because you need to do it by the end of the year for it to be able to show up on next year's taxes. So I'll try to get a video out on tax loss harvesting, what it means, why I'm doing it here over the next month. Now, options premium, those two, the 5 contracts on Siboney-Stillwater and the 2 contracts on Bank of America, we received $91.31 in options premium. I did reinvest this money into Siboney-Stillwater. You'll see that here in a little bit. So this option premium on Siboney-Stillwater really right back in and bought me 5 more shares of Siboney-Stillwater. So running options is a way to build out a position just using the options premium. So once you get to 100 shares, you could run a wheel on that, whatever position it is, once you have 100 shares, and add whatever options premium you have back into it. And it would be a way to build out that position faster. Now on to the dividends. November 24th, we did this. I know this is last week, but this came in after I did the video last week. So these Williams and Sonoma did pay out a dividend on the 24th. It paid us $1.81, a whopping $1.81, but I'll take every penny we can get. It picked up 0.009999 shares of Williams and Sonoma and added an additional 3 cents over the next calendar year. This is a position, I've only got a couple shares here. That's why we're not getting much in dividends or reinvestment. I do have the reinvestment plan set up, DRIP, dividend reinvestment plan. It basically, my brokerage and a lot of brokerages out there let you click that button or check that box and say anytime a dividend pays out dividends, a company pays out dividends, it goes right back into that company and buys more shares. And that's what is going on here. So as soon as a company, whether it's Williams and Sonoma or any other, pays out dividends, those funds automatically go back in and buy more shares of that same company. So Williams and Sonoma paid us $1.81, bought 0.00999 more shares, adding an additional 3 cents over the next year. Now here we are to the first new capital that we invested into the portfolio. On November 30th, we did invest the majority of our investment for the week, $1,869.93. And with those funds, we bought 4 more shares of Medical Properties Trust. This is an existing position, ticker MPW. Out of the REIT, this is a REIT out of the real estate sector. We picked up those shares at $4.80. We added 2 more shares to CVS Health Corporation, ticker CVS. This is out of the healthcare sector. We picked up those shares at $67.10. This was also one of the ones I was going to focus on. If you caught my stocks to buy, 5 stocks to buy for December video, CVS is one of those companies that I'm going to be focused on. So you'll see this probably throughout the month. So long as it stays below my cost basis, I'm going to be adding 2, 3, 4 shares here and there to CVS all month long. We added 18 more shares to our Havity Furniture Company's position, ticker HVT. This is out of the consumer discretionary sector. They have run up quite a bit. I'm just about to 100 shares, so I'm going to go ahead and run this out to 100 shares and back off because it's actually up by quite a bit right now, but I want to get to 100 shares at least on this one. So I'm going to go ahead and do that, even though it's a little bit above my cost basis. It is not taking my average cost per share above 15% of its 52-week low. So I'm going to continue 10 more shares, I think, and this one is going to be done unless it drops back down again. And I'll just wait until it does drop back down after I add these 10 shares. And that's probably going to happen next week. And we picked up those 18 shares at $30.90. We picked up 10 shares of the Kroger Company. This is our newest add to the portfolio. Trying to build this position out right now. Another one that's starting to run up. I was getting these in the $42. Now it's at $44.60. Ticker KR, out of the consumer staples sector. I want to get this one to at least 100 shares. I'd like this to get to 200 shares. But I'm going to be patient on this one, and I'm not going to add to it. If it pops above 45 per share, I'll probably back off and wait for it to come back down. And last, on November 30th, we added 10 more shares of Cisco Corp, ticker SYY. This is also out of the consumer staples sector. And we added those 10 shares at $71.44. Trying to get this to 100 shares. I think we've got 10 or 15 more to get there. We're pretty close on Cisco Corp, and then we'll probably back off that, focus on Kroger, and building out some of these other positions that are on our Kroger and Cisco Corp were also on my 5 stocks to buy for December list as well. All total, these new shares of these companies, all existing positions in the portfolio, added an additional $60.84 in passive income over the next calendar year. And we weren't done. Like I said, if you remember on the first page, we did get the Siboney-Stillwater, the 5 contracts of Siboney-Stillwater to hit and receive some options premium on December 1st, which was Friday. So we did take that options premium and plug it right back into Siboney-Stillwater. We picked up 5 more shares, ticker SBSW. This is a mining company out of the material sector at $23.34, and we picked up those shares at $4.67 per share. And those 5 new shares of Siboney-Stillwater added an additional $1.11 in passive income over the next calendar year. Total invested $1,893.27, and total passive income added $61.98 over the next calendar year. Now let's run through the sector weights of the portfolio. Communication sector is sitting at 9.53%. Consumer discretionary makes up 1.73% of the portfolio. Consumer staples, this one is starting to grow, and that is because of the Cisco, the Kroger, and when Procter & Gamble presents some value, so long as it stays under 155, I'd like to drop back down to 151, 148, somewhere in there. I'll be adding to that. So consumer staples, I'm seeing some potential undervaluation in that sector, so I'm going to drop money into it. Like I said, Cisco, SYY, I'll probably back off once I get to 100. Try to get Kroger to 100, so long as it stays under $45 per share, and then we'll go from there. Energy sector sitting at 6.69% of the portfolio. Financials makes up 8.65. Healthcare sitting at 17.28% of the portfolio. Biggest chunk of the portfolio here. We didn't add any Johnson & Johnson. That one's almost back to my cost basis at 158. My cost basis being in the 159 or 160 range. So we're kind of going to back off the Johnson & Johnson again, unless it drops back into the low 150s, 140s, and then we would add some more. But I'm over 100 shares there. It's starting to get to a bigger piece of the pie. And healthcare, I will be adding to CVS here. And this is CVS being one of the stocks to buy for December that I'm looking for. So we will continue to build out this sector a little bit. But we're getting close to the 20% threshold that I'm wanting to allocate to any one sector as well. So this is one we're going to have to really watch. Industrials sitting at 7.97% of the portfolio. Technology makes up 7.83%. Materials has lost its status as second place. It now sits in third at 12.84% of the portfolio. Utilities sitting at 5.09%. REITs and real estate took over second place. I think it was the MPW shares, medical property trust shares that we added, just tilted in their favor. 12.92% of the portfolios for REITs and real estate. No ETFs. I am not against ETFs. I have ETFs in my daughter's custodial accounts. I just consider my portfolio its own ETF, and I am looking at potentially adding an ETF in the, what sector was I looking at? In the emerging markets sector is one that I was looking at. VWO, though there is a couple others out there similar to VWO that might have slightly better pay implications, 0.04% payout or not payout, but cost basis, right, than VWO. So I'm looking at a couple in the emerging market sector I may add over time, though that one's run up as well. A lot of sectors have run up recently. A lot of green out there in the market right now. Hopefully your portfolio is green as well. Over here on the right, here are the portfolio sector weights. The percentages match up to the pie here, and then you can see the dollar amounts allocated to each sector as well. Now here it is, portfolio, the total portfolio. I show this every week. I know a lot of you like to see this. Hopefully, again, it gives you some motivation to watch a portfolio built out over time every week, and to see that I want to show you this, the part of the ups and downs of the market and parts of the ups and downs of a portfolio. I mean, it was just 3 weeks ago, I was down 9%. Now, because the market has turned green, I'm down 0.15%. Next week I could be in the green. I do not focus on this. This is not my focus. This is my focus. But let's run through this real quick. Here are the ticker for all the positions in the portfolio, how many shares I own of each, the current price as of the close of business on Friday, the market value as of the close of business on Friday, my average cost per share in this column, how much I have into each position in this column, how much of my funds are in this column, whether I'm up or down right here. Full transparency, if a position's in the red, you're going to see it's in the red. If a position's up, you're going to see it's up. What sector the position falls in, whether it's a quarterly, monthly, semi-annual payer, that's found here, and how much they pay. current dividend yield as of the close of business on Friday for each position, as well as totals at the bottom. Yield on cost, my yield on cost right here, the portfolio weighting. So on the previous slide, we saw the sector weightings. This is for each individual position, and I don't like any one position to be over 10%. So that's why we mentioned Johnson & Johnson here in the healthcare sector. It's at, where was it? 8.88%. So it's getting close to the 10%. My rule is I don't want any one position to be over 10% of the portfolio. I don't want any one sector to be over 20% of the portfolio. So I have to watch and make sure that I'm keeping these weightings I want to evenly weight out the portfolio as much as I can. Some sectors are going to get overweighted at times, and some sectors are going to get underweighted as time, but I'm trying to keep it as balanced as possible and use that that balance and that diversification to my benefit. The estimated annual income in this position, this column here, payout months in this column, dividend growth year over year in this column, and where it sits at 15% of 52-week low. So let's talk about this one here, because this may not make sense to everyone, especially if you are a newer viewer of the channel or a follower of the channel. When I have a position in the portfolio, I don't like to buy it unless it's under my cost basis, right? Under my cost basis here, or it's within or under 15% of its 52-week low. So let's talk about that. HVT, I mentioned I want to build this position out to 100 shares. Currently at 90, so I need 10 more. But my cost basis is at only $28.01. But currently the price sits over $32.22. So I'm going to add 10. I'm going to break my rule here and add 10 more shares, even if it's over this cost basis. But it shouldn't bring me up over $28.59. It'll be close. That's where I want to be, or under, for my cost basis, right? $28.59. I'm at $28.01. So I should be able to slide in 10 more shares, even though it's slightly over my cost basis, and still be under where it sits at its 15% of a 52-week low. Let's see if we can find another one right now. NTR is both below my cost basis and below its 52-week low, so that's not a good example. Bank of America is not really a good example because I'm running the wheel on. Well, I can't really find another one right now that meets that criteria, right? Even Verizon has run back up to 38.57. So it's under my cost basis, but it's also under my average cost per share. So that's not a good example. But anyways, I hope you get the idea of what I'm using the 15% of its 52-week low. I'm trying to keep my cost basis under 15% of its 52-week low, or lower. I mean, preferably the lower the better. But I'm willing to buy shares of a company, maybe even if it's over, right, 15% of its 52-week low, so long as it doesn't pull my cost basis up over 15% of its 52-week low. I hope that makes sense. Now, total shares, we're sitting on $5,658.3 or $5,658.339 shares total. Market value sitting at $190,211.03. I have $190,500.17 into the portfolio. So I am down slightly, down $289.14 or 0.15%. Current dividend yield sitting at 4.67%. Yield on cost sitting at 4.668%. And this is what I focus on. I'm not focused over here. I'm focused on this. I'm focused on the estimated annual dividend income paid out by all the positions in the portfolio, and all the dividends that they pay out on an annual basis sits at, and this is whether the market's up, down, floating sideways, whether I'm up, down, or floating sideways. This continues to grow week after week, month after month, quarter after quarter, year after year, as I add new capital, like I did this week, as I run options, and that options premium goes back into the portfolio as companies pay out dividends and as companies raise their dividends. Enbridge recently raised its dividend by 3%. So that's the most recent raise in my portfolio here. But it currently sits at $8,892.05. So very, very nice to see this. I would think over the next week or so, we're going to bust over the 9,000 mark and should be over 10,000 in the very first month or very first quarter of 2024. So very nice to see this getting to be a significant chunk of money here that I'm getting on an annual basis. I think it's a little over $300 a week right now. If I was to break this out on a 52-week calendar basis, how much would I be getting every week? It's a little over $300, and that's not counting the options premium. So that I'm getting on a weekly, monthly basis either. So very, very nice. Really starting to make a significant impact. I could turn off the drip and pay some bills with this now if I really wanted to, but I'm going to continue to reinvest into the portfolio and let this snowball grow even faster. Well, that is it for this one. Let me know what you added to your portfolio this week. Do you run options? What options are you running? Some stocks out there, I know people are getting very good options premium on some pretty volatile stocks, and that's really what you're looking for with options premium. When I was running the Williams and Sonoma ones earlier this year, man, I had my best month when I was running Williams and Sonoma. But it also has a higher, more volatile. It's higher volatility than it is a lot of other stocks, and it seems the higher the volatility, sometimes the better the options premium is. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences. I share portfolio updates like this every Sunday. I also do a stock pick of the day series Monday through Thursday. So if you have a company you'd like me to cover in the stock pick of the day series to see if there is any value there, drop it down in the comment section below. I'll work it in those video series. And hit that notification bell so you're notified whenever we put out any new content as well. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have any questions on the positions I have in the portfolio, why I have them in there, maybe my cost basis for those, go ahead and drop that into the comment section down below as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk that comes money and should never invest any amount in a comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.